Okay, here we go. And if I can ask you, just make sure you are muted, just in case there is some background on your side that we don't disturb everybody else. So if you can, please mute yourself. If you're not muted, we will get this thing kicked off here. So here we go. All right, everybody. So if we haven't connected, my name is Miguel Camargo. I'm a regional vice president with Flow here in Jacksonville, and some of you were invited by the Go Getters. We are all one team, one dream around here. Over the next 5 days, I'm going to encourage you that you give us an hour of your time. You know, what's the one commodity we can't get back, and that we give is our time. I'm giving you my time this evening because I want you to make sure that you're successful, you make some holiday money, and you're going to 2025 a lot more profitable, right? And we do move at a very fast pace. I do record this. I do recommend that everyone take notes. If I tell you write this down, write it down. If I say don't worry about that, don't worry about it. Because the most important thing is you're not here to write a whole textbook, Jessica. We're gonna get through this thing. We're gonna have some fun. Lindsay, we're gonna have fun. Rob, Andrea, we're gonna have some fun today, okay? And hopefully we get to cheerlead each other. That once everyone passes their exam before the end of the month, we can say, thank God we ain't got to listen to Miguel's voice no more, because you guys are going to be listening to my voice like crazy. I made a joke with somebody yesterday saying, you guys are going to go to sleep with me. And I just said, hold on. No, let me not say that one. Um, yeah, right, Jessica? Yeah, exactly. We're going to have a little fun. So let me go ahead and share my screen here. I encourage you, do not just stare at me. Take notes. Make sure you take notes. The biggest thing you can do is respect your own time. You're here with us. Let's make the most of it. Let's take some notes. You got some good looking people tonight. So chapter one, everyone that we're going to be using it, exam FX, you can pass. For the sake of this recording, do us a favor. Let's not say the name of the company that you are with, just because I like to keep this neutral. You won't believe how many people watch our videos and da da da. And I like to help these videos for everyone around the country. But okay, let's go ahead and get this stuff kicked off, guys. As I jump into this, I will share a little bit about my story. I've been involved in the insurance industry for 14 years. So I know this stuff, Stephanie, like the back of my hand. And the reason is because I took the exam. I did so well on the exam that they invited me back 5 times to do it. And that I said, once I got good at this, I said, I'm going to make sure my people ain't got to go through this. And I'm smart enough to know I ain't smart. So I promise you, if I can do this, give yourself some hope, right? All right. So we're going to be going over chapter one, completing the application, underwriting and delivering the policy. So a couple key terminologies we're going to go through here, okay? So if you have not read chapter one, I'm going to go through this I'm going to go at a very slow pace, but move fast. You can come back and re-listen to this. So I'm going to go through some definitions. You do want to come back and make sure you understand each of these. But let's talk about insurance, okay? An insurance company, Stephanie, is designed to manage risk. They're going to cover you, but they want their money. So the first thing we want to know is adverse selection. Adverse selection, Derek, talks about ensuring the risk of one or more prone to losses than an average person, okay? We're going to cover adverse risk a little bit more in detail a little bit later. An agent or producer. You individuals are getting your license. You're the agent. You're the producer. Another word for that is field underwriter. So write that down if you haven't already. As the agent, you are the producer, the field underwriter, and the producer. You're the person. When you are the agent, you represent the company. You don't represent the client. So whenever you're sitting down with a client, you are representing the company and what you're doing. Applicant or proposed insured. I think it's pretty common sense, but the applicant or proposed insured is the person applying for life insurance. You do know insurance is one of those things you have to apply for. You can't just buy it. So In life insurance, not everyone can buy it. You have to apply. Beneficiary is a person, Darlene, who receives the benefits of an insurance policy. Beneficiaries would be someone, hey, listen, someone God forbid passes away, you leave it to your children. Your children are the beneficiaries. Death benefit. I want you to write the word death benefit / face amount. The word face amount and death benefit, you're going to see those words quite often. They mean the exact same thing. That is the amount of money paid to the insured when the person passes away. So let's talk about fraud. When you see the word fraud, the word says intentional misrepresentation, but I want you to write the word in parentheses, to injure. To injure. So whenever you see the word to injure in the question, you're going to be able to say, oh, that's fraud. There's little keywords you're going to be able to remember. So insurance, intentional misrepresentation, and then in parentheses, put fraud. Oh, I'm sorry, to injure. All right, insurance policy. An insurance policy is a contract between the policy owner and the insurance company, which agree to pay the insured or the beneficiary for the cost of loss for a specific event. If you don't know, life insurance, death benefits, someone's got to die. Unfortunately, it's one of those products nobody wants to use. One thing about life insurance, guess what? We like to say it's a responsibility product. If you're going to sell this to somebody or if someone's going to buy this, they got to love their family. I've sat down with families, Jessica, and the husband's just said, well, she's going to remarry somebody else. I ain't going to be living off my money. And I say, that's your family. I feel sorry for your ass. I feel sorry for your wife. She might as well just cut your ass like right now. You ain't got no insurance, right? No. All right. So insured. The insured is the person covered by the policy. Now, one thing, Darlene, is that the insured does not always have to be the policy owner. I'll give you an example. Let's just say your mom is the policy owner. She gets a policy on you. You're the insured. Since she's paying for it, she's the policy owner. Whoever's paying the premium is the policy owner. They control all the rights of the policy. Another one right here we want to write down, Rob, is insurer, which is principal. Another word meaning the exact same thing. That's just the name. That's just the insurance company. Insurance company means the insurer. Another word, Alana, we're going to look out for is the word lapse. This means policy termination. So, hey, listen, you forgot to make your premium payments and your policy lapse. I don't know if you ever do this in Duval, guys. You ever run into people who ain't got no car insurance? We call that riding dirty. They policy lapsed. They didn't make no payments. I ain't never said that I've ever done that. But if I've ever done that, my policy lapsed, right? So if someone makes a payment or misses a payment and their policy is terminated, that means their policy is lapsed. Covered. And when there's policy is lapsed, there's no coverage in force. Life insurance covers a person's human life. Policy owner, the person who is entitled to exercise the rights and privileges of the policy. You might actually want to write all that down right there, Mia. That's something you might want to just have for yourself because guess what? The policy owner is the one who controls everything about the policy. And then premium, this is the money paid to the insurance companies. I can tell you this, I've been doing insurance for 14 years. I don't like insurance companies. I hate giving them people money every daggone month, right? You ever feel like it's just money just going out the window? But then when something happens, you're like, oh my gosh, thank God I had it. That's the premiums you pay into that, Lindsay. So let me know when you guys are good to go. Kind of just give me a unanimous thumbs up when you guys got that, and I'll move on to the actual beginning of the chapter, the most important, to the beginning pieces. All right, Rob, I got you right there. Everyone.
Give me just 2 seconds. Okay, I'm good. Thank you.
All right. Everyone else good? Derek, you're good. Tanisha, you good?
I'm good.
You good? All right, all right. Okay, let's move on to contract law, right? So one thing about life insurance, you want to write this down. Insurance is the transfer of risk of loss. That's the definition of insurance. I will no doubt you will see that on the exam, Derek. Insurance is the transfer of risk of loss. Okay. So the four elements of a contract, you want to write this down. And you might want to write this down like your own separate pieces, right? So elements of a contract. What makes a contract legal and binding? We're going to go through the four steps. First one is agreement. Agreement is just simply, so let me just kind of read this. Offer and acceptance means that there must be one party that offers something to another. So in insurance, the applicant offers by submitting the application. So Lindsay, you and I are sitting down and you say, hey, listen, I'm the applicant. I'm offering my medical questions. I'm offering you my medical history and this premium to be covered. Insurance company says, based off of the underwriting, and they issue the policy, that's acceptance. So the client offers the application, insurance company offers or accepts the application and issues the policy. That's offer and acceptance. And again, you might want to come back and rewrite these definitions, but for the sake of time, we're going to keep moving. Consideration. Consideration is a binding contract, okay? Consideration is something of value that each party gives something. Keep it very simple. Consideration is when the applicant promises to pay the premiums. That's all that is. Insuring consideration says the insured promises to pay the premiums. That's all you need to write down. Consideration, applicant or policy owner promises to pay the premiums. And consideration for the insurance company says that as long as the contract was valid and someone passes away, they promise to pay the benefit, the death benefit. Each party is giving up something. The third one, Derek, let me not lose you guys, is competent party. This one's simple. They have to make sure that this person knows what they're writing. So it requires that both parties are of legal age, mental competence, and not under the influence of drugs or alcohol. So in order to get insurance, you want to not be like you're prepping for a Diddy party. You don't want to be any of this kind of stuff. No influence, none of this stuff. All right. Rob, how much baby oil you got in the background? Rob's my personal trainer, guys. Come on. So you cannot be under the influence of alcohol or drugs. Legal competence. I mean, just like a standard policy. You got to be over 18. Sometimes in the application, or I'm sorry, on the test, it'll ask you, is a secondary education required? No, you don't need a secondary education to enter a contract. The last one is this. The purpose of a legal must be legal and not against public policy. So you can't write up an insurance policy that's against public policy. And I'm going to go a little bit more into detail on that. Just kind of write that out. The purpose of a contract must be legal and not against public policy. Kind of give me a thumbs up if you guys are, if I can move on. Okay. All right. Everybody. I see people using the thumbs up on the Zoom. Okay. Look at that. All right. So let's talk about, these are some, how you say, Darlene, these are going to be some definitions we're going to use. Okay. So distinctions of an insurance contract. The first one is you're going to write contract of adhesion. The definition of contract of adhesion, Jessica, is, hey, you cannot negotiate the contract. If the insurance company sets the rate, you ain't coming back and negotiating this thing. So next to contract of adhesion, I want you to write the word take it or leave it. Obviously, the definition is the insurance company sets the rules. There's no negotiating the rates. It's take it or leave it. Insurance company says, hey, if you want $1 million of coverage, it's going to cost you $100 a month. You can't come back and say, well, listen, I got 90. All right, it's not, can I get that million for 90? No, it's take it or leave it. All right. The next one is aleatory. This right here, what you want to write is this right here. Unequal exchange in value. This simply means, Danielle, you're going to pay $100 for $1 million of coverage. Insurance company's taking the bigger risk. So it's an unequal exchange. Every month you're betting $100. Hey, if I die, you're going to pay my family $1 million. Your insurance company says, hey, I'm going to bet $1 million that you ain't going to die. And it's an unequal exchange. It's a game you play every month. Every time your insurance policy, your premium comes out, you're like, made a bet. I made a good bet because if something happens to me, I want to make sure my family's good. But that's how insurance companies work. It's kind of crazy when you kind of break it down like that. That's just what insurance is. All right. The next one we're going to come down to is unilateral contract. All I want you to write down is unilateral is only one party is legally bound to do anything, which means this. The insurance company is legally binded to pay the policy. See, the insurance company can't cancel you, but you can cancel the policy at any time. So Danielle, let's just say I paid up 9 death claims, right? And probably half of my clients have gotten cancer and died. They couldn't 6 months in a policy. Oh, dang, you got cancer? No, we're good. We got to cancel that. Too late. The insurance company's got to, it's binded. They have to keep it. And then God forbid something happened. And unfortunately, they have all passed away. They all got the money. They were legally binded. So uni, which means one party, one-sided party contract. All right, conditional contracts requires that certain conditions must be met by the policy owner and the company for the contract to be executed. Again, this is very simple. The insured, which is the person covered, pay the premiums and provide proof of loss if something happens. All right, I want you to write the word warranty. All you need to do is an absolute true statement right there. And next to the word warranty, I want you to write the word guarantee. Guarantee, warranty. We'll come back into this in a little bit more into detail a little bit later. I just want to give you the bullet points, right? Representation are statements believed to be true of has to be true, best of one's knowledge. That's the definition of representation. I'd write that down. It's something super simple. Jessica, if I'm writing your insurance policy or you're writing mine, I'm just giving you my word. You can't prove that I'm lying, but we're going to go based off of good faith. That representation is true to be in that example, okay? Now it says untrue statements on an application will be considered misrepresentation. You want to write that down. You will guarantee to see misrepresentation on the exam. Misrepresentation is when you say, hey, listen, I'm not a smoker. But we see your ass smoking some Newports, right as I got off. Oh, hold on, let me. Well, you got a big ass thing of Copenhagen in your mouth right here, right? That's misrepresentation. Misrepresentation, if discovered, would alter the underwriting. That would alter the underwriting decision. Furthermore, is a misrepresentation or intentional and considered to be fraud. I'm not telling you to ever write a policy for someone. Don't ever lie for somebody. Like, I've had people come back to me and say, hey, listen, are you a tobacco user? What if I tell you I'm not? Bro, don't lie. Because what happens is, if you put on the application, I am a non-smoker, but they come back and they die in the first 2 years, and they can prove that, hey, at the application, they were a tobacco user, that policy is not getting paid out. And now you got to explain that to the family. And you got to don't ever put yourself in that situation. It's not good. It's not worth it. All right, perfect. Contract law. Next one. I know we're moving faster, guys. So completing the application. So when we're opening up an application, right? The first thing you're going to do is you're going to collect general information. This is the name, age, address, date of birth, gender, income, marital status, occupation. Just like it's almost like filling out a job application or a background check, whatever. Also, in the general information, you're going to ask, hey, do you have any existing life insurance policies? And you're going to gather that information because we're going to go into what is called replacement. There's going to be something called notice of replacement. We'll go into detail a little bit more into that later. Andrea, the second part of the application is medical information. This is simply where you're asking, hey, what's your height? What's your weight? You're going to go through all their medical exam or go through all their last 10 years of their medical history. Very simple. But you remember how I said earlier, the agent is known as the field underwriter? As the agent, you are the company's first line of defense. They're expecting you to be honest because you represent the insurance company, Alana. So you're taking the application, you're making sure that you're doing the right thing by the insurance company. And your job is to obviously explain these, help prevent adverse selection. Again, I'll go into adverse selection here shortly. Your job is to complete the application, get all the signatures. Your job is to collect the premiums and issue what is called a conditional receipt. It is also your job that once the policy is issued, that you deliver the policy. In today's world, where a lot of things is electronic, policies delivered for you automatically. We used to for years. If a policy got sent to our office, Jessica, I'm calling you and I'm saying, hey, can we meet somewhere? I got to get this form signed out. Bro, you know how annoying that was to have to. It was annoying, but what it is, we got to do the right thing for our clients. So there's a part in the application where you do what is called the agent's report. So let's just say you might suspect something where you say, hey, you know what? They may have been lying about this, or hey, listen, they said they were 250. They weren't no 250. They were this. I can't ever tell you I've ever seen an agent report. I've never done an agent report in my life, but Jessica, for the sake of the exam, that's what an agent report is, where you write in extra comments if you need to help prevent adverse selection. All right. So what signatures are required? You need the agent's, you need your signature, the proposed insured. And since everything's done electronically, there is no way you can mess up. Even if you're Puerto Rican, Jessica, there's no way that you can't mess up. I see your shirt. I see your shirt. It says, see, changes on an application. Okay. If you were using a paper app, it's just like a bank document, a legal document. You can't use any whiteout. You can't scratch it out. You have to use the one line and initial. The client has to initial. I know some of y'all are young on here. Derek, I don't know if you even know what a bank deposit is. You know, this actually where you used to have to go into the bank, sign the back of the check, and sign it. They used to have this pen that was chained to the desk. Doesn't have the nerve. These banks have the nerve to lock up that pen. The pen was so cheap, anyways. But in that example, obviously, you'd have to make sure that's in place. So consequences of completing of incomplete applications. So before a policy is issued, Lindsay, you got to answer all the questions. If you happen to make a mistake and a policy was not able to be submitted based off a paper app, they would send it back. But Mia, again, everything's electronic. We don't have to worry about that. But on the test, they might ask you if there was incomplete questions, you got to go back and answer the questions and re-get signatures. Collecting premium. So Derek, right here, when you collect a premium, a policy, you issue what is called a premium receipt. So when you write an application, you got to deliver a receipt. Now, this right here is what you're going to see. The most common type of receipt is called conditional receipt. This is when a person prepays for their policy up front and they're covered immediately. So there's two types of ways to take an application in, Danielle. You can do what is called cash on delivery, COD. So you take the application, you don't take any money up front. You're going to submit the application regular under there and wait for it to get approved. They're not covered. Until they make that payment, they're not covered. But if they make the premium payment up front, you issue a conditional receipt. Okay, let's move on to the next one. Last one on this one, complete an application, is replacement. Write this one down. This is the definition of replacement. Write it down. It's simple right there, Mia. Replacement is the practice of terminating an existing policy, letting it lapse for a new one. So if you sit down with a client and they have what's that company? Small State, and you switch them over to Snake Farm, you are replacing a policy from one policy to the next. Now, the one thing about replacement, you have to do it is in the best interest of the policy owner. You don't want to transfer a policy from one company to the next when it's not in the best interest of the client. We do see it happen in the industry. Lindsay asked, can you have multiple policies? Yes, you can have as many policies as you like. And if you need an additional policy, holla at me. I'll be happy to write you extra policies. Or holla at yourself when you get your license, right? So Derek, make sure that you understand that replacing a policy is switching from one to the next. Before I move on to the next piece, guys, any questions on this? Anything you want me to review? Any questions? Because I think it's pretty straightforward, right? Okay. Let's go into underwriting. So this is what you need to write. Write that definition right there. That is the definition of underwriting. You will absolutely see that, Derek. Underwriting is the risk selection and classification of a policy. So what does the underwriting look like? They're looking at a couple things. They're going to be looking at your height, your weight, your occupation. They're going to be looking at your past health. They're going to look at your driving records. They're going to be looking at your hobbies and all that fun stuff, right? As the agent, again, you're the field underwriter. Your job is to help prevent adverse selection. I'm about to dive into that actually. Again, we kind of already talked about this, what the underwriting process is. But let's talk about this. You want to make sure you know this. Insurable interest, Mia. Insurable interest is where the person taking out the policy would lose something. So the definition is the policy owner must face the possibility of losing money or value in the event of a loss. You want to write that down. So insurable interest only has to be in effect at the time of the application. So I'm going to give you an example. When does insurable interest matter? So you can take out a policy on your own life. I have $1.3 million of insurance on myself. So I paid for that. I bought it on myself. I have insurable interest on myself. You can have insurable interest on your immediate family. Immediate family matters. And I'm going to give you those situations. A spouse, a grandparent, a parent, or your child. Let me give that to you again. A spouse, a parent, a grandparent, or a child. Your child. Those are the immediate family members. You can't take out a policy on your brother. I don't know about you. I got a couple dumb ones. I'm like, man, you're gonna do something dumb. I'm trying to cash in on when your dumb ass does something. I tried to do it before I knew this. They said you can't do that. I'm like, dang it. Trying to hit the mega millions on that one because I already knew you were gonna do something stupid. Um, that's what I thought in my early 20s. So the next one is you can have insurable interest on business partners. I want to give you an example. When does insurable interest, Lindsay, happen on business partners? Lindsay, you and I go open up a restaurant together. We're both 50-50 partners. I'm going to buy a policy on you. You're going to buy a policy on me. If something happens to me, you don't want my family trying to come in and run the restaurant with you. They weren't doing the day-to-day stuff. So you're going to use that insurance money to buy out my family's portion of the business. That make sense? Now, remember why I said time of the application is only when it has to happen? Lindsay, if you and I start up a restaurant and we know most businesses fail within the first 3 years, let's just say the business fails in year 2. We still have those insurance policies. And 30 years down the road, we've been paying on the policies. And God forbid, one of us, it's time to go. Because you've been paying on that policy, you get to collect on it, not the family. I'm not telling you, Mia, you need to go start a bunch of businesses with a bunch of people and wait for them businesses to dissolve. But something about. The second one, key employee. If you are an executive of a business, and without you, the business would suffer. The business can take out a policy on you, where the business would be the policy owner and the beneficiary. That's also called a key person policy. I'll go into a little bit more details on that, but that is all we need to know about insurable interest right now. Sources of underwriting. I think we already talked about this. They're going to be looking at the background information, medical history, there's a couple other sources. The main force of underwriting is the application. On the test, Derek, they're going to ask you, what is the main source of underwriting? The application. The key source of underwriting is the application because they're going based off of what you're seeing. Okay, so there are a couple third parties that insurance companies might call on to help do a little bit more investigation. Really where this comes into play, Darlene, is something called the investigative consumer report, called the inspection report. This is where an underwriter would go through, and there is an independent service where they're going to cover your financials, your moral information, where they're going to ask your neighbors a bunch of questions. But that's something noted in the Fair Credit Reporting Act. And we're going to dive into detail there. You do want to know what the Fair Credit Reporting Act is because it's something you want to know as an individual, but it is on the exam. The Fair Credit Reporting Act establishes procedures that consumer reporting agencies must follow in order to ensure records are confidential, accurate, and relevant, and properly used. I've never seen this come into place, Adalia. I've never seen it. But for the sake of the exam, just know the Fair Credit Reporting Act is out there. If there's any inaccurate information, you're allowed to dispute that. So if an insurance company ever denies you insurance, you have the right to know why they denied you. You have the right to ask all the questions and get everything in writing. So make sure you know that. So let's wrap up this piece right here. Consumer reports are written or oral statements regarding the consumer's credit, character, reputation, habits collected by a reporting agency from employment records, credit reports. I don't know who the hell needs to know this. I mean, I guess like you going after a $10 million policy on yourself, maybe they want to know who you are. I don't know when that would come into play. Investigative consumer reports are similar to consumer reports is that they provide information on the consumer's character, reputation, and habits. The primary difference is information is obtained through an investigation and interviews with associates, friends, neighbors, and the consumer. Unlike consumer reports, these reports cannot be made unless the consumer is advised in writing within 3 days. Don't trip out over those days on this one right here. You might want to write it down for your sake, but I would not be surprised if you don't see it. Any questions on that? Feel free to unmute yourself if you have a question. No, okay. I know there's a mouthful there.
No. Miguel,
Hold on. Who's trying to say something?
me. So you said the key source of underwriting is what?
The application.
The application. Okay. Thanks.
Perfect. Thank you, Mia. Let's go through here. All right. An individual who unknowingly violates the Fair Credit Reporting Act is liable for the amount of equal loss to the consumer, as well as reasonable attorney fees. An individual willfully violates the act enough to constitute general pattern and business practice will be subject to a penalty of $2,500. Again, right there, the consumer has the right to know what's in the reports. All right, so this right here, this is the main report. You do want to know this, Destiny. This is called the Medical Information Bureau, also known as the MIB. The Medical Information Bureau. They are a third-party agency or corporation, and their job is to protect insurance companies. It is a nonprofit organization. Of course it is. That's how they set it up. But their job is to collect, maintain, and make available to insurance companies important underwriting information. I've had people do this, Tanisha. They go down to 3 different insurance companies and try to get approved, and they get denied by all of them. It's the same information. They're going to pull the same information. That's what the MIB is for. It's to make sure that they prevent adverse information from being put out there. I don't know if I've already done an application on it or any of you guys. If you've done it by just on our applications, you put in your name, your name, phone number, and your email, and all of a sudden you have a whole profile set up through an insurance company already. They have access to that. That is not the same thing as the HIPAA stuff that I'm going to get into here shortly. But just want to hip on that. Oh, here we go. Here comes HIPAA. If you have ever gone to the doctors, ever been to a doctor's, their stuff is called the Health Insurance Portability and Accountability Act. This is federal law that protects your health information. This simply says that insurance companies cannot share, or your doctors cannot share your information without your authorization to do it.
So I have a quick question, and I hate to jump in here like this, but how on earth, if it's, of course, there's HIPAA protecting us, how is the MIB getting that information when that is protected information?
They don't have your personal medical records. But obviously your stuff with your social, they can't pull exactly why they declined you individually, but they share that same, hey, decline on that side, decline on that side.
So it's like, it's hits, little hits then. It's
Correct.
Not everything.
Correct. They can't share your medical records, but they do share information.
Gotcha. Thank you.
Good. Good question, stuff. All right, so last part of underwriting, we're going to talk about risk classification. You want to write this down? This is simple information that you want to get right. So there's 3 types of risk. Let's talk about this. The higher the risk, the higher the premium. The first type of persons that someone can be classified as is preferred. This is a person who is generally super healthy. They're like, they have no health conditions. They really have no history of challenges. Their BMI is really good. I know when I joined the business, I was like 125. I got like preferred plus, my skinny ass back then. I might get preferred now. I ain't gonna preferred plus like I did, but preferred, obviously, that next to that, you can put cheaper premiums if someone gets preferred status. Standard is a person who is a standard person. They're normal. They're average. So that's going to be a normal quote. So if you've ever quoted somebody and they're come off as a standard quote, that's what they're going to get once their underwriting comes back. The next one is called standard. Another word for standard would be called rated. This is resulting in higher premiums. And the reason someone would be considered rated, a lot of it in today's world is BMI. We like to call it height challenge when you're a little bit, when your height is not caught up with your weight, right? But when you have a high BMI, there's a chance that you're going to get health conditions. Would you agree on that? I mean, just biologically, it's just what happens. So doctors look at that, insurance companies look at that. Hey, listen, this person has a higher chance of getting these health conditions, so we're going to charge them more for that example. Or somebody is a daredevil. You know, they do a lot of crazy hobbies, or they have a dangerous job. There's a chance that they could get rated. It's all based off of level of risk. The other one is an applicant who is rejected or considered declined risk. That just means you submit an application and all of a sudden now they are not able to get approved because of whatever reason. They get declined. Declined risk. Pretty simple. All right. So one we want to know is STOLI. I want you to write this down. Stranger or originated life insurance. It's called STOLI. And I want you to write illegal next to that. STOLI or investor originated life insurance. You're going to laugh when you see this. You remember how we talked about insurable interest? You have to have like a reason to take out life insurance. There has to be an event of a loss. So STOLI is a life insurance arrangement in which a person with no relationship, typically a stranger, purchases life insurance on the insured's life with the intent of selling the policy to an investor and profiting financially when the insured dies. So in other words, STOLI are financed and purchased solely with the intent of selling them for a life settlement. I don't know about you. I'd be trying to find a bunch of old people. Say, hey, your ass gonna cash this in soon. Get a policy on you, get a policy on you. I don't know who thinks of this. Obviously, it's in the textbook because somebody did it. It's like those warning labels. And then investor-owned life insurance is the exact same thing, where investors who have no insurable interest and it initiates a transaction designed to transfer the policy owner's rights to someone who has no insurable interest. Yeah, I don't know who the hell does this, but Rob, that happens.
Frank from Shameless. This is all Frank. That's right when I read it, I thought of him if you ever seen that show.
Frank, as a TV show?
Yeah, no, Shameless. Shameless is the show.
Never
Yeah, if
seen
you
it.
haven't, I'll definitely check it out. It's hilarious.
Is that on Netflix?
Is it on Netflix? I believe so.
Perfect. Okay,
Yeah.
I'll check it out. Perfect, guys. All right, let's go on to the next one. Delivering the policy. So we're wrapping this up. This is literally probably the last big chapter. So delivering the policy, Mia, happens that so the policy is issued, got approved, and now you have to give the policy to the client. So when you, as the agent, deliver the policy, your job is to explain the policy provisions, riders, exclusions, and ratings. I'm going to go through all that detail. Just kind of write that down. First step, delivering a policy, write that down. That's what we're going to be doing. So provisions just means the rights and obligations of policies. That just means, hey, listen, you got covered for $500,000. Your premium's $65 a month. Make sure you pay it. Any riders? Riders are add-ons to the policy. Exclusions would mean, hey, listen, the policy won't pay out due to this. Or ratings would be, hey, you're not as healthy as we thought you were, So you got rated. So there's generally what are called amendments added onto the policy. So you need more signatures. Okay. So let me give you some definitions here. Buyer's guide. You will absolutely see this on the exam. Buyer's guide is generic information about a policy. Write that down. I'm going to give you the bullet points you need to summarize that. A buyer's guide is simply you are you're sitting down with an agent and you request it. A buyer's guide is only given when requested. And a buyer's guide is literally a guide that you are looking for price comparison of all the policies. You just say, hey, listen, show me all the policies you have, and I want to compare prices. Again, it's only given upon request. And it is generally given when the policy is delivered. Remember right here, a buyer's guide is generic information. The next one is called policy summary. Just write that down right there. That a policy summary is a written statement describing the features and elements of the policy. And then in parentheses or whatever, I want you to write the word specific information. So the generic, the buyer guide gives you generic information about cost and comparisons of all the policies that they offer. A policy summary, Mia, is a personalized component of all the stuff that you have on your own policy. So everyone gets a policy summary. It's in every policy. It gives you the specific information about your policy. Okay, the term illustration.
I got a question. You said to write something in summary for the policy statement. I missed that part.
So policy summary, just write the word specific.
Okay.
That gives you specific information.
Okay.
So Andrea, the term illustration means a presentation or depiction. You want to write this down? The word illustration means a presentation or depiction that includes non-guaranteed elements of a policy. I'm going to go through all that in chapter 2 tomorrow. I just want you to kind of write that down for your sake because we're going to come back to that. And we're almost done, y'all. Let me know when I'm good to move on. Anybody's hands hurting? They all cramped up yet? No? Nobody good? Okay. So, like we were talking, Derek, when does coverage begin? Coverage begins when the premium is paid. So let's just say you deliver an application or you took an application and there was no premium paid. You're going to take the policy, Danielle. You're going to deliver it. You're going to get the premium. And Rob, you're going to get what is called a statement of good health. A statement of good health is simply says, hey, listen, since the last time we did this application, has anything changed? And most of the time, it's probably going to be no. So all you need to write is if the application was taken with no money, you need to collect the payment and the statement of good health. Derek, how you feeling, man? You feeling good? All right, cool. All right. And guys, that is pretty much it. I'm going to click on these last two things right here, but these really, I'd be surprised if you see it on the exam. The privacy protection, I wouldn't worry about writing this stuff down. I'm just going to go over it just for the sake of it. The Graham and Leach Bliley Act stipulates that general insurance companies may disclose non-public personal information to a non-affiliated third party, may not disclose. Okay, so that protects your privacy. come back and read this for your sake if you want to know it. This one right here, you, as an individual of America, you should know this. The U.S. Patriot Act. This came out in 2001. Your boy Dick Cheney gave you this after 9/11, where they could tap your phones. Yeah, that came out during 9/11, and the anti-money law, anti-money laundering. I'd be surprised if you see any of that on the exam. If you want to come back and read that, sure, go ahead. But how's everyone feeling? You guys feeling good? And
Yes.
tonight was light work, guys. I just want to let you know the chapter 2, 3, and 4 is the meat of it. Okay, so stick with us. We got another 4 nights. I encourage you that you show up every night ready to run. If God forbid something happens and you know you can't make it, don't beat yourself up. I'll send the recording to your RVPs or to our teams. I just encourage you, make sure you come back and re-listen to this over and over again. The best way for you to study, if you're an audio learner, replay. If you're kinesthetic, where you got to actually be involved, go take the quizzes with an open book. And then visual, read it for yourself. Taking notes, you're always going to remember things, writing things down. It just works that way. I'm telling you things that help me. I think we should jump into a quiz, just see how our thought process is, kind of see where we're at. And I think, Jessica, you're already ready to go, man. You're ready to hop on this thing. Let's go. I see you're ready to jump on it. I see you. All right. So let's just see where we're at, right? If an insurer requires a medical examination of an applicant in connection with the application for life insurance, who is responsible for paying the examination cost?
The applicant.
Someone said the applicant, right?
Yeah.
I say
Okay.
the company.
Would it be the insurer?
The insurer?
The insurer. Somebody put
Yeah.
something in the chat.
Sure, it's the company, right?
Yeah, somebody else put A too.
Somebody put A. Okay, so let's just think this out, all right? I always recommend read the question twice out loud before you even read the answers, because you want to know what the hell you're actually reading. If you're dyslexic like myself, I get distracted halfway through the conversation, through the sentence anyways, right?
The medical.
It'd
The
be
cost
the
of the
insurer.
examination would be waived because the insurer is asking for the examination, so they would have ultimately waive that.
Okay, Darlene. Okay, that could be something. Well, let me just kind of give you the thinking process, right? If a medical exam is being required, someone's got to get paid to do it. If your ass is getting stuck with a needle, that nurse ain't doing it for charity. So it's not, the cost is not going to be waived. Someone's going to pay for it.
The insurer, since they're requesting it.
The insurer, absolutely.
Okay.
The answer is A. The reason being is that the insurance company is going to pay that. I tell all my clients this: hey, you want to get your blood work done for free? Increase your insurance policy. You get a free medical exam done that way. So there you go. So submit answer. Answer is A. Perfect. So during the underwriting process, an insurer may require that an applicant receive a medical examination. The insurer is responsible for the associated cost of the examination. I have seen where a applicant will get the medical exam done, but the medical exam didn't come back completely good. So the insurance company will require more underwriting. At that point, the insurance company will require the applicant provide those medical labs done, or whatever they need done on their dime. The insurance company ain't going to come back and try to follow up with it. They did their part in the beginning. So let's go. Perfect. You remember that one I said we weren't going to read? They wanted to show up right here, right? I think I know this one anyways, but just for the sake of letting y'all read it, y'all kind of let me know what you think. The Graham-Leach-Billy Act was passed.
I'm gonna go with C.
Go with C. I like it. If you don't know it, C-O-A-L. I see it. Just A, B, C, D. It doesn't any many money mo this thing, right? I always say this. If you don't know it, you got a 25% chance of getting it right. It's like Stephanie, I just see you. You just
And
right.
it's usually C. I don't care. It's usually C always.
It's always yeah, that's how I know y'all went to school in Duval. That's like y'all grew up in Jacksonville. That's even if you didn't grow up in Jacksonville public school system. So what y'all want to go with?
I say
Okay.
Yeah, I'm feeling like A or C. I don't know. The sentence is longer.
A.
I'm telling you, I would lean towards A also, Jessica.
I say A too, because we just talked about how it protects the person's privacy.
I mean,
Failing this.
but see, Rob, see what happens when I skip it, like I skipped a workout. Like not today though. Got my today though. All right, but the Graham and Leach Billy Act was passed to protect private customer information that is filed with a financial institution. Customers must be given two disclosures: one on the onset of business, and the other before information is disclosed, as well as yearly updated. Cool. That's always in the mail that you throw away, right? All right. In comparison to a consumer report, which of the following describes a unique characteristic of investigative consumer reports? All right, we got people going D. Okay.
I say B.
Okay.
Same.
B.
E.
All right. I swear, this how you guys gonna go vote tomorrow? Just choose an A, B, D, C. Just any money mo. Good luck, guys. All right, it looks like a lot of people going B. Let's go B, just see where we're at. All right, let's just kind of see where where this works out. Whoever chose D, or whoever chose D got it right. So to the customers, associates, friends, and neighbors provide information. Okay. So both investigative consumer reports provide additional information, Darlene, from an outside source about the customer's character, reputation. Both types of reported are under the Fair Credit Reporting Act. The main difference of information of the investigative consumer reports is obtained through an investigation, interviews, associates, friends, family, neighbors, and consumers. Guys, again, we went through that one time. This is why I said, do this thing like an open book test. If you don't know it, go look up the answer. Just so you get yourself familiarized with this stuff. There's nothing wrong with having an open book test. All right. An applicant is denied insurance because of information found on the consumer report. Which of the following requires that the insurance company supply the applicant with the name and address of the consumer reporting company?
That's A.
A.
I say A. Fair Credit
All
Reporting
right,
Act.
everyone's going A on that one. Okay, but Fair Credit Reporting Act governs what information can be collected and how it is shared, or how it can be used. Who makes up the Medical Information Bureau, the MIB, Men in Black? Who makes it up? Wish I had that little freaking gadget.
D.
D.
Insurers. Okay. Yep. Medical Information Bureau is made up of insurers, so the companies can compare information that they have collected on potential insurers and information of other insurers may have discovered. All right. Which of the following is a basic source of information used by the company in risk selection process? What is the key source, Mia?
Oh, the key source.
Is it C?
The application. Application.
Application.
It's D.
Application. Remember, the first thing the insurance company is going to look at is the information you gathered. It's the application.
Okay.
Right there. Basic source information using insurance risk selection process. All right. When an insured makes truthful statements on an application. Y'all saw that? I had a whole little glitch there.
Wait,
I was like, what just happened there?
I don't know.
All right. Did it change up the whole question too? Yeah, that was not the question. Okay. Anyways, when an insured makes okay, that's true. It's the right question. When an insured makes a truthful statement on the application for insurance and pays the required premium, it is known as the following. These would be the four elements of the
Consideration.
contract.
Consideration.
Okay. You remember those four elements of a contract? Offer and acceptance, consideration, legal purposes, and the other one. So consideration. You see how we went through it in the first hour? Now you guys are already starting to get this thing? Repetition is the mother of learning when we're doing this. Okay. An insured pays $100 in premium every month for his insurance coverage. Yet Danielle, the insurer promises to pay 10 grand for the covered loss. What characteristic would be the contract described?
I think that's salvatory.
You got it right.
Aleatory, yep.
Idalia, I see you. Yeah, got it right. Unequal exchange in value. Remember that. And I like to teach in stories and examples, so it kind of helps you remember this thing. An individual applied for an insurance policy and paid the initial premium. The insurer used a conditional receipt. 5 days later, the applicant had to submit a medical exam. If the policy is issued, what would be the effective date? Policy's effective date.
D, the date of application.
Okay. We feel good with D? Okay, let's try that. Let's see if we're right.
Oh.
Is it
Okay.
B?
So,
Oh, it's A.
so let me show you. Let me explain why. Oh, I like how you go back and change it to A now. No, I meant to say that. So let me explain what happens here. Okay. So when you do an application and you take the premium and the application, they're covered immediately. The moment they have a medical exam, the underwriting started. I had a client in 2020. We did the policy, initially covered. She had to go do a medical exam. Guess what? She didn't do the medical exam. She passed away in that time period. Do you think the family got the money?
No.
Unfortunately not. That is part of the process. That's why you got to be on top of your clients to get that underwriting done. So,
wait, I have a question. So she died before the medical exam, or she missed the medical exam?
she kept missing they daggum phone calls. She never called them back. She one of those people that like, oh, I'm gonna get to it later. I'm gonna get to it later. And I know we can all be like that in life. Unfortunately, she never did the medical exam. And because it was whatever is later, just add this to your frame of mind, is whatever is later. So they're covered immediately. The moment that medical exam required, you better get that thing done. Better get that thing done. All right, so good stuff. All right, as a field underwriter, a producer is responsible for all the following except. Do not let these words, because these questions can be weird, tricky. Whenever you see the word except or not, you're looking for the wrong answer. And I always say, do the process of elimination. Get rid of the first two that you're like, I know that's not right. So you give yourself a 50-50 shot at that point. So as an agent, producer, field underwriter, all the same words, is responsible for all the following tasks, except. So Lindsay says A, Danielle says A, Tanisha says B, Ernestine says D. Who gonna say C? Might as well freaking say C. So, gotta be like Pokemon, catch them all over here. Okay, so let's go through these. A, issue the policy that's requested. Duh. What you want, DNA? Saying? Solicit the business with, well, submit the business that will fall within the insurance underwriting guidelines. Yeah, you would do that.
Mhm,
C, you would obtain the signatures. Yes, you would do that.
mhm.
D, you would help prevent adverse selection. Yes. You would do B, C, and D.
Says
You
A.
would not do A because you're not the insurance company. Insurance company is the one who issues the policy, not you.
Mhm.
You write the application. Insurance company issues it. I promise you, terminology is going to be once you get this terminology down, you're going to be like, oh, I got it. Don't worry. So the producer does not issue the policy, but delivers the policy. The producer has the duty to solicit business that will fall within the underwriting guidelines, represent a profitable business to the insurer, and help prevent adverse selection. We're almost done here, y'all. All right, Andrea, in the underwriting process, it is determined that the applicant for life insurance is in poor health and has some dangerous habits. Which of the following is true concerning policy premiums? What are we going on this one? Ernestine, you're going to change the answer 4 times? Where are we going to be at? So
It's gonna be B.
BBA.
B. It would be B.
Let's say B.
Oh, okay. Whoever said A, I want you to come back and read this. It's going to be rated, aka substandard. They have poor health and dangerous habits, which means they're a higher risk. So remember, the higher the risk, higher the premium.
Mm-hmm.
So good stuff. So applicants are considered substandard. Daredevil, I love that. If you've ever seen these things on the application, it will ask you, hey, do you plan on in the next 3 years, or have you in the last 3 years scuba diving, mountain climbing, parachuting, hang gliding, racing any automobiles, snowmobiles, or boats? I like to say this. Hey, do you plan on doing any of these white people activities? Da, 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 da. And I make them laugh. And they're like, and then I have some people like, I do those kind of stuff. I'm like, yo, ass crazy. You're going to charge yourself more money.
So all of that is just super high risk for real? Or
Yeah, I mean,
it just depends. I don't know.
what you mean
I'm
depends?
I'm
You
super.
jumping out of an airplane with a freaking skydiving.
I mean, yeah, like swimming with the dolphins in the water,
No,
like
no, no.
water
Dolphins
stuff.
is one thing. Swimming with the sharks is a whole other thing. Listen,
Okay.
swimming
Well,
with the
I
dolphins
hate to tell
ain't
my
nothing.
person this stuff then.
Okay. An insurer receives a report regarding potential insured that includes the insured's financial statements or financial status, hobbies, and habits. What is the report that is used? A. Nope.
No.
Nope. Medical Information Bureau is for medical stuff.
Is
That is going to
it
be
B?
B, the inspection report. All right, let's talk about this. Process of elimination. Have we seen the word underwriter report?
No.
If you ain't seen the word, get rid of it. Agent's report? Agent
No.
ain't got no background on that. So if you, Adalia, we're going to go through that process of elimination, you could do 50-50 there. So there we go. Number 13, which of the following protects consumers against circulation of inaccurate or obsolete personal information or financial information?
A?
B.
I'm looking at A and D.
Have you seen, let's go on through unfair
But we didn't go through that. Yeah, that's why I was like, I don't know.
You will see that, but that's not on here. If you
Okay.
haven't seen it, don't go through it just yet.
Okay, cool. I'm gonna go with
I say B.
B.
If you chose B, you're most likely right.
Okay.
If you start to see this, all they're asking is for the definition of fair credit or the Fair Credit Reporting Act. It's literally just the definition of it, but they're asking it in so many different ways. All right, 2 more questions. What is the purpose of a buyer's guide?
D.
Dahlia says D. Ernestine says B. Tanisha says D. Andrea says D. Danielle says D. Okay, I think we can go with D. So why is it D though? D is because it compares the cost of the policies. So good job, guys. Good job, y'all. Last one, y'all. Which of the following best describes the concept that an insured pays a small amount of premiums for a large amount of risk on the part of the insurance companies? Another way of saying that,
Adhesion.
you're saying B.
You should have found this guy.
Another way of saying this is insurance, you're paying a small amount of premiums for the insurance companies to give a high amount of death benefit.
D.
Somebody said D. Stephanie, was that you said D?
Yeah.
Everyone's gonna. I see everyone's going D for Diddy.
I'm gonna go B. Is D?
Someone's going B.
I'm going B.
Because everyone was excited. Give me a second here. Everyone chose
Aleatory.
D for aleatory.
Aleatory. Yeah. We pay less premium.
Yep, because you guys chose that, and you're starting to see that things start to repeat themselves, right? If we submit this, and because you guys were choosing that, I do have the baby oil ready. Just for the sake of it, yes.
Oh my
I
gosh.
mentioned the baby oil, and I had to go get it, right? All right, guys, we got an 86. Congratulations, y'all. Congratulations.
Not bad.
All right.
Get
So
better.
if you see, this is nothing more than repetition. We went through chapter 1. If you knew the vocabulary, we'd be like, oh man, we're going to get this thing down pat. Take that quiz so many times. They're going to repeat themselves. Who gives a crap? Memorize this bull crap. All you need is to pass the exam. You ain't never going to use this stuff in your real life. This ain't going to make you an expert on insurance. You ain't going to be going over to TikTok talking about a bunch of life insurance stuff. We're just going to keep this stuff simple, right? Thank you for the roses, right? See, Lindsay, tomorrow we're going to cover chapter 2. Let me give you a preview of chapter 2. You're going to want to have your notepads ready. Chapter 2, we're going to be going through all the different types of insurance policies. If I'm you, if you have access to chapter 2, start to look at it. I'm going to break this stuff down to the simple and make it so understandable that when you look at this and say, okay, I'm going to take the complex and simplify it. First thing is, we just got to get used to seeing it. So in between now and tomorrow, go get comfortable with chapter 2. Just read through it, kind of get your feet wet. If you haven't got to chapter 1 yet, finish chapter 1. But we're going to knock through this thing as fast as possible. So any questions on this stuff? Any questions? Okay.
Mhm.
So tomorrow, I encourage you, notepads ready, be focused. We appreciate your time tonight. Appreciate the level of intensity. And I look forward to seeing you all tomorrow at 9 o'clock. All right.
All right.
Thank you. Have a
Thank
good night.
you.
Oh, and I will post this recording on our channels. So
Okay.
if you're with the Go Getters, make sure you go subscribe to the YouTube channel because you'll have access to them all right there. But everybody else on our team, we'll post them in our channel also. But enjoy your night.